Hi everyone, this is Paul Fisher, Chief Investment Officer at New Road Capital, giving you your March monthly update. So quite an interesting month in the equity markets. Really a tale of two cities, if you want to call it that. You had local equities doing fantastically well through the month, up 3.6% for March, but then countered by developed market equities down about 4.5%, mostly driven by the US. And then sitting in between them, you had the rest of the emerging markets space sitting at about just under 1% up for the month. So it's really a positive market for equities if obviously in the emerging space. But obviously the US kind of a lot of fears around tariffs and what tariffs are going to do. Today is the 1st of April. Tomorrow, the 2nd of April, is the big tariff announcement coming out of the Trump administration, and we'll see more detail tomorrow. I suspect you might see a bit of a rally in the offshore markets after that announcement. The markets don't really like uncertainty. So regardless of what the announcements are, generally, if the market can digest a bit of certainty, that tends to be good for markets in the short term. So we'll see. We've had quite a bit of a sell-off offshore. It has provided some nice opportunities for us in certain areas, which we have taken advantage of. And we're expecting probably a bit of a rally, but it'll be interesting to see what happens more on the detail around those tariffs this week. But our sort of main thesis on the tariffs is still the same as it was before. We think for the most part, the tariffs are going to be used as a sort of negotiation tool, a bargaining chip. And then where they'll sort of be implemented more permanently would be the reciprocal tariffs. So any tariffs that other nations have on the US, we think that the US will start to reciprocate there. For example, China, we think those tariffs will sit for a while. But yeah, so we still kind of fairly, I suppose, have a balanced view on the tariffs. But we don't think long term they're going to be inflationary. There's still the tax cuts that need to be announced and passed through Congress. Which would be able to offset a lot of the increased costs on the tariffs as well. But we have had obviously more in-depth discussions around that, but still fairly neutral there. But it will be interesting to see what happens this week. If you just look valuations, obviously valuations offshore coming down quite nicely, or valuations increasing as the markets come down. So as I say, we have found some very good opportunities. We still like tech, for example, as a long-term secular play. And we've really been able to buy some of those stocks at a lot better valuations. And it's not often that you get to buy them at those valuations because they're such quality businesses. They're usually running at fairly high. They're never going to be deep value stocks, but sometimes you can get them a little bit cheaper, and then you should take advantage of that. So we have been kind of doing that. We're finding some quite exciting opportunities. We're still very bullish long term on the markets. We think this little dip really on the tariff uncertainty will kind of, move away once we see a bit more certainty around it. Inflation in the US still very much under control. So it came down through the month. Headline inflation sitting at 2.8% at the moment. If you look at food and energy prices, so your more cyclical kind of counters, still very much sort of in range with where they should be. Energy prices still fairly stable and looking good. Oil sitting at about $71 a barrel. So not really any inflation pressures from an input point of view. If you look at South African inflation, still very much within the mid-band of our target, actually on the lower end of that. So we're sitting at, inflation at the moment about 3.2% from a 3 to 6% target. So we're a little bit hoping that the MPC starts to drop rates a little bit, and that would be good for us. But very much, from a finance point of view in South Africa, still looking pretty healthy, and markets actually at all-time highs on the local side. Rand strengthened to the dollar quite substantially through the month. Started at about 1870 and ended at about 1830. So we actually don't think that's Rand strength. That's more dollar weakness, and probably see that turning around once the tariff announcement comes through. So we expect the dollar to normalize against all the major currencies as well. It has been weak against the euro and the pound as well. We expect that to turn a little bit. Partly that is also to do just with the trades, the pre-trades of corporates in America trying to front run any tariff announcements. So importing a lot more than they usually do. So the imports have been quite significantly higher than they usually are. Which would obviously be weak for the dollar. So that should unwind in the next few months as well. So we're expecting dollar strength going forward. From the SA 10-year the SA US 10-year bond spread, still looking very attractive. The Orbi was fairly flat for the month, so the South African All Bond Index fairly flat, but still looking very attractive. Yields did go up a little bit, so we still like the SA bond market. It rallied quite significantly over the last few days, in line with the equity rally that we've seen. But still providing good opportunity and good diversification there against our offshore holdings as well. And then offshore bonds had a nice month, up about 0.6% in dollars. That's developed market bonds, mostly driven by the US as well. So US bonds up quite nicely. And if you recall, we have actually upweighted quite a bit to US bond exposure on the long term, which counteracts some of the negative on the equities as well. So overall, still very diversified, good portfolios. We are seeing a little bit of, or we did see a little bit of volatility through the month. It can continue for a little bit, so we'll see what happens. But still, managing the portfolios fairly conservatively, and quite excited about what's to offer going forward. So that's the basic update. Things still looking good, and obviously we'll be in touch on any big news that comes out. But if not, feel free to contact me or the team, and always happy to help and give some insight. But all the best. Let's hope for a good April. Take care. Bye.